Breaking. Stellantis just dropped a bombshell that's sending shockwaves across the entire U.S. auto industry. And if you're in the market for a truck, what's happening right now might just save you thousands. We're talking unheard of discounts, slashed MSRPs, and dealer incentives so aggressive that even Ford and GM are scrambling to respond. Something massive is unfolding, and this isn't just about a few price cuts. This could change how trucks are sold in America forever. It all started quietly. Stellantis, the parent company of Ram Trucks, has been sitting on an oversupply crisis for months. Lots are packed with unsold inventory. 2024 Ram 1500s, Rebels, T-Rexes, just sitting under the sun collecting dust. Dealerships have been begging for relief. And now it's here, but it's not coming as a trickle. Stellantis just opened the floodgates with massive, across-the-board markdowns that no one saw coming. We're talking up to $15,000 off select models. Some are reporting nearly 25% off MSRP with stacked incentives. But here's the kicker. This isn't just about clearing old inventory. Stellantis is going head-to-head with Ford's F-Series and GM's Silverado lineup. They're tired of being third place in the truck war. And what's the fastest way to get attention in a saturated market? You hit price. Hard. And that's exactly what they're doing. Leaked dealership memos show aggressive marketing campaigns being rolled out nationwide. Some with zero-down financing, extended 0% APR terms, and loyalty bonuses that are double what we've seen before. This is not normal. This is a full-blown pricing war. And consumers? They're flooding in. Dealers that were silent 2 months ago are now overwhelmed with calls, test drives, and orders. Ram trucks that were untouched for weeks are now flying off the lots. Inventory is shrinking faster than anyone predicted. And Ford? GM? They're on red alert. Ford has already started sending out internal notices to dealers to remain flexible on pricing. Translation: get ready to compete or get left behind. But there's a deeper story here. Why now? Why such a drastic move from Stellantis? According to insiders, this isn't just about market share. Stellantis is under pressure. Sales haven't rebounded like they hoped post-COVID. Interest rates crushed buyer confidence in Q1. And with electric truck development lagging behind schedule, they needed a big move to shake up the narrative, and fast. Slashing prices on gas-powered trucks is their power play. And it's working, but there's more going on behind the scenes. Multiple Stellantis production facilities are reportedly being re-evaluated for cost-cutting, with temporary shutdowns looming if inventory doesn't clear fast enough. So this fire sale? It might also be a survival tactic, get cash flowing, keep factories moving, and buy time to restructure. Some insiders are even whispering that Stellantis is preparing for a major product revamp in 2026. And this discount blitz is just step one in a much larger strategy to reset the brand image and reclaim dominance in the truck market. Meanwhile, local dealers are split. Some see this as a once-in-a-decade opportunity to blow past sales goals. Others are concerned about long-term value. If Ram trucks are being sold this cheap today, what happens to resale value next year? What happens to trade-in prices? And more importantly, will this trigger a race to the bottom among all automakers? Because if Ford responds with similar incentives and Chevy follows suit, we could see the biggest truck price correction in U.S. history. And that could ripple across the used market, financing companies, even insurance rates. Every piece of the automotive ecosystem could be affected by what Stellantis just did. And let's not ignore the elephant in the room. Consumers who bought earlier this year at higher prices are furious. Forums and Facebook groups are lighting up with complaints. People feel blindsided. A Ram 1500 they bought for $62,000 in March is now being offered at $49,500 with zero interest financing. Some are even trying to return their trucks or refinance under new terms. It's chaos, and Stellantis knew it would be. But they also knew they had no choice. Holding on to these trucks any longer could have meant factory shutdowns, mass layoffs, and further financial instability. So they pulled the ripcord, and now the entire industry is bracing for impact. And the impact is already starting to show. Regional dealers across Texas, Michigan, and Florida are reporting a 20 to 30% spike in foot traffic, not just from loyal Ram customers, but also from Ford and Chevy owners curious about how far their dollars can stretch. And that's where Stellantis might have just pulled off a masterstroke. By slashing prices now, during peak truck season, they've caught the competition flat-footed and are pulling buyers right off their rivals' lots. Now here's where things get even more interesting. This aggressive pricing strategy is backed by one of the largest advertising pushes Stellantis has launched in years. Nationwide commercials, digital campaigns, even targeted offers through apps like CarGurus and AutoTrader are driving urgency. Flash sales, limited time offers, some deals expire in days. It's all carefully designed to create the perception of scarcity, even though supply is still strong. This isn't just about numbers. This is about creating panic buying behavior. And it's working. But there's a risk, a big one. Stellantis is gambling that this discount storm won't completely erode the brand's perceived value. Ram has spent years building an image of premium toughness. Leather interiors, 12-inch screens, luxury trim levels that rival high-end SUVs. If the public starts seeing Ram as the cheap truck brand, it could take years to undo that damage. And that's the double-edged sword of pricing wars. You might win the quarter, but lose the next 5 years. Still, there's no denying what's happening. The U.S. truck market has just been shaken at its foundation. And consumers, especially middle-income buyers, are watching closely. With inflation still pressuring household budgets and financing tougher than ever, a $12,000 discount on a new Ram could be the difference between buying now or waiting another year. Stellantis knows this. They're not just selling trucks, they're selling opportunity. Meanwhile, industry analysts are scrambling to reassess projections. Just weeks ago, Q3 forecasts had GM and Ford maintaining comfortable margins thanks to strong truck pricing. But now, everything's changed. If Stellantis keeps this up, profit margins across the big three could take a major hit. Shareholders are going to be watching the next earnings calls very closely. This could either be seen as a bold market-grabbing win or a sign that Stellantis is spiraling into desperation. And let's talk about the used truck market, because this might be one of the biggest casualties. Dealerships that specialize in certified pre-owned Rams are now sitting on aging 2022 and 2023 models that no one wants. Why pay $42,000 for a used Laramie when you can get a brand new one with full warranty and rebates for just $45,000? The price inversion is already starting to squeeze small dealers and independent sellers. They're watching their inventory lose value by the week. Financial institutions are also on high alert. Auto lenders are suddenly looking at portfolios filled with loans issued at peak pricing, many of which are now underwater. If mass depreciation continues, we could see a wave of negative equity unlike anything since 2008. And if Ford or Chevy retaliate with price cuts of their own, that ripple turns into a tsunami. And yet, Stellantis seems unbothered. In fact, some insiders suggest they're only getting started. The next phase? Deep cuts on heavy-duty models. 2,500s, 3,500s, commercial fleet packages. Fleet buyers are being quietly approached with customized offers, some under invoice. This is not just a public sale. This is a systematic move to wipe out inventory across every truck class, including work trucks, haulers, and upfitted service vehicles. And if those start hitting the public market at discounted prices, the effects will spill well beyond dealerships, into construction, agriculture, oil and gas, and beyond. Even longtime Ram loyalists are stunned. Some are calling this a once-in-a-generation moment to buy. Others are wondering whether Stellantis is digging itself into a financial hole it won't be able to climb out of. But one thing is certain, this isn't over, because the rest of the industry is being forced to respond, and fast. Ford, for instance, has already begun quietly adjusting its retail pricing strategy. Multiple Blue Oval dealers have received updated incentive sheets showing increased cash rebates on select F-150 trims, particularly on high-volume models like the XLT and Lariat. There's also internal chatter about Ford preparing an emergency package of limited-time incentives that could drop within the next 2 weeks. And that's significant, because Ford never plays this kind of game unless they feel real pressure. But Stellantis has forced their hand. GM isn't far behind either. Reports are surfacing that Chevrolet and GMC are accelerating end-of-summer promotions. Silverado and Sierra inventories are already being reallocated, with some regions offering up to $8,000 off before Labor Day. It's not as aggressive as Stellantis yet, but it's building. If both Ford and GM go full throttle with discounts, this truck war could turn nuclear by fall. And the consequences won't just be competitive, they'll be structural. Because here's the real danger. Automakers are addicted to margin. For the last few years, record profits were built on low supply, high demand, and premium pricing. That model just got shattered. If the industry slips back into pre-2020 discount habits, profits could dry up fast. And that's terrifying for companies already stretched thin by EV investment, factory retooling, and labor negotiations. And speaking of labor, there's another layer unfolding beneath the surface. The UAW and other unions are watching these truck sales very closely. Stellantis' plant workers, many of whom recently fought for wage increases and job security, are now looking at massive discounting as a threat. If these price cuts don't drive enough volume, production slowdowns are inevitable. Layoffs could follow, and that puts even more pressure on Stellantis leadership to walk a tightrope. Stimulate sales without collapsing the foundation they just spent a year rebuilding post-strike. Meanwhile, consumers are trying to make sense of it all. Social media is full of confusion and speculation. Should I wait for deeper cuts? Will prices keep falling? Is this the bottom? And the truth is, no one knows. Because this isn't just a market correction, it's a strategic pivot. Stellantis is gambling big, and the other automakers are watching every move, ready to pounce or retreat, depending on how buyers respond. At the dealership level, sales managers are working overtime, trying to capitalize while the window is open. Trucks are being bundled with maintenance packages, extended warranties, even bonus trade-in offers. Anything to close deals before the competition catches up. And the sales pitches are getting bolder. This Ram won't be here next week. Ford can't match this deal. You'll never see this price again. And honestly, in this environment, those might not just be tactics. They might be facts. But perhaps the most telling sign that this bombshell dropped by Stellantis is shaking the industry comes from Wall Street. Stock analysts are beginning to revise outlooks. Bank of America just downgraded two major auto lenders, citing truck market instability. AutoNation's CEO hinted at a possible pullback in wholesale acquisitions if prices don't stabilize. And several investor calls in the last week have been dominated by one question: what is Stellantis doing, and how far are they willing to go? Because right now, every major auto company is asking themselves the same thing. Is this a temporary stunt, or the beginning of a brutal new pricing era? If this is the beginning of a new pricing era, then Stellantis may have just redrawn the battlefield lines for the entire American auto industry. And unlike previous flash sales or seasonal incentives, this feels deeper, more deliberate, like a strategic reset of how value is being defined in the full-size truck segment. Stellantis isn't just undercutting prices, they're attempting to reset consumer expectations entirely. When buyers start believing that $50,000 trucks should really cost $38,000, that perception shift doesn't go away overnight. It reshapes the entire market. And that perception shift, it's contagious. Already, competitors are fielding harder questions from their customers. Chevy dealers are reporting longer negotiation times. Ford reps say buyers are walking in with Ram quote sheets, demanding price matches or better. The psychological warfare that Stellantis has triggered is perhaps more powerful than the discount itself. Buyers are emboldened. They smell blood in the water, and they want deals. But how long can this go on before the cracks start to show? Remember, automakers don't just make money on vehicle sales. They rely heavily on financing arms, extended warranties, dealership service packages, and residual value. When trucks are sold at a loss, or with razor-thin margins, those ancillary revenue streams come under pressure. And with interest rates still elevated, financing profitability is already taking a hit. If prices continue to fall, expect lenders to tighten credit terms even further. That means higher credit score requirements, stricter loan-to-value ratios, and more buyers getting priced out despite the discounts. Now zoom out for a second. Imagine your Toyota or Nissan sitting just outside the big three truck war, watching this unfold. You're already struggling for a slice of the American pickup market. But now, with Ram driving prices downward, your entire sales strategy just got a lot harder. How do you pitch a $55,000 Tundra when a similarly equipped Ram is sitting next to it for $44,000? The math no longer adds up. Stellantis hasn't just disrupted Detroit, they've disrupted everyone. And that may be the real genius or madness behind this bombshell. Stellantis isn't trying to beat the competition by playing the same game. They're flipping the board entirely. In one aggressive move, they've shaken consumer loyalty, spooked Wall Street, destabilized the used market, and put their competitors in a defensive crouch. It's the kind of move that, if successful, could skyrocket Ram sales and re-establish dominance in segments where they've fallen behind. But if it fails, it could burn billions in lost margin, trigger investor panic, and leave the brand scrambling to recover its reputation. Still, for the average American consumer, none of that matters. Right now, they see one thing: a golden opportunity to get a full-size truck at a price that seemed impossible just months ago. And they're rushing in, trade-ins in hand, financing apps ready, hoping they can lock in a deal before the wave passes. But what they might not realize is this wave is still growing. Because behind closed doors, Stellantis is already preparing the next phase of this aggressive campaign. According to leaked internal documents and dealer sources, Stellantis is preparing to unleash a second wave of even deeper discounts, this time targeting custom orders and fleet sales. That's right. Not only are they slashing prices on trucks already sitting on lots, but they're about to roll out factory-direct incentives for buyers willing to place new build orders. This could mean stackable rebates, priority build slots, and guaranteed low-rate financing for customers who spec out 2024 and even early 2025 models. It's a clear sign that Stellantis isn't looking to just dump inventory. They're trying to lock in long-term volume. Fleet buyers are especially being courted. Think contractors, landscapers, municipal departments, energy companies. Some are being offered private rebates up to $17,000 per unit on bulk orders, plus free upfits, extended service plans, and 10-year drivetrain warranties for commercial use. That's unheard of. Stellantis is breaking the rules, and for good reason. They know fleet contracts can secure hundreds of truck sales with one signature. And if they win those contracts now, they can stabilize production schedules into next year, giving them leverage against both investors and labor unions. But this move isn't without its risks. Ford dominates fleet sales. GM has deep-rooted relationships with government agencies and Fortune 500 companies. If Stellantis wants in, they're going to have to undercut everyone and possibly eat huge losses in the short term. Still, insiders say Stellantis is willing to bleed now in order to dominate later. It's all part of what they're calling a multi-front campaign to reclaim truck leadership before EV disruption fully takes over. And speaking of EVs, here's where things get even more complicated. The Ram 1500 REV, Stellantis' electric truck, was supposed to be their crown jewel heading into 2025. But production delays, battery sourcing issues, and lukewarm early demand have forced a strategic pause. So while Ford pushes the F-150 Lightning and Chevy slowly ramps the Silverado EV, Stellantis is doubling down on its combustion engine legacy. They're squeezing every last drop of value out of gas-powered trucks while they still can, and in the process, dragging the entire market with them. Meanwhile, the used truck market continues its free fall. Wholesale auction values for 2021 and 2022 Ram 1500s have dropped over 12% in just 6 weeks. Dealerships are losing equity on trade-ins overnight. Some have even started pulling used Rams off the lot, hoping to wait out the storm. But the storm isn't slowing down, it's intensifying. And the ripple effects are touching every corner of the automotive ecosystem. Auto repair shops are reporting a surge in inquiries from owners looking to sell or trade in before values drop further. Banks are reviewing loan portfolios tied to Ram products. Insurance companies are adjusting replacement values down, leaving some policyholders underinsured if their truck gets totaled. And credit unions are seeing an uptick in refinancing applications from customers who now realize they bought in at the peak. This isn't just a Stellantis problem anymore. It's becoming a systemic issue, created by one bold, high-stakes move to shake the entire market. And that begs the question, how far is Stellantis really willing to go? Because based on the patterns we're seeing, this might only be the beginning. Industry sources are now speculating that Stellantis has at least one more ace up its sleeve, a nationwide Ram Revival event, rumored to launch before the end of the summer. If confirmed, this campaign would feature a blend of in-person dealer blowouts, online-only flash sales, and factory-sponsored loyalty events aimed at locking in returning customers. What makes this particularly striking is the scale. It's being described as unprecedented, with marketing materials being translated into Spanish, French, and even regional dialects for deep Southern and Midwest markets. This isn't just a sale. It's an assault on market share. And the competition? Ford and GM are still hesitating. Their financial departments are weighing whether to match Stellantis' cuts, or hold the line and hope this blitz implodes under its own weight. But that wait-and-see approach could backfire, because by the time they decide to react, Stellantis might have already scooped up tens of thousands of undecided buyers, taken over fleet relationships, and permanently redefined value in the truck segment. In the end, Stellantis is gambling big. Some say recklessly, Others say brilliantly. They're sacrificing margin today for domination tomorrow. And while that strategy could cause short-term pain, depreciation spikes, used market crashes, credit tightening, it's also the kind of bold, all-in move that could rewrite the power structure of the American auto market. Because this isn't just about moving trucks. It's about rewriting expectations. It's about telling the American consumer, you deserve more truck for less money, and we're going to be the ones who give it to you. The coming months will reveal whether this bet pays off or backfires. But one thing is certain. Stellantis just shook the auto world to its core. The race is on, and the rest of the industry is playing catch-up. Because when a pricing war starts with this kind of shockwave, no one escapes untouched. Stay tuned.